This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
Hi, I'm Louis Llanes, and this is the Market Call of the Week. It's January 10th, 2019. Happy New Year. Today, I'm just going to dive in just in the U.S. stock market and talk a little bit about the market action we saw into the holiday, into Hanukkah and Christmas, and how we've been coming out since then, and talk a little bit about expectations of a pause, because that's generally what the technicals are showing. I'm not going to talk about the fundamentals. I'm not going to talk about the politics with Trump or any of that. I'm just going to focus in on technical analysis in a shorter term time frame, because I think a lot of people are really kind of wrestling with what's going to happen in the near term and what I should be doing. So let's just dive in right now. So if you take a look at this chart here, this is a chart of the S&P 500, and I'm looking at a daily candlestick chart, and I'm just going back through last year into mid-June all the way up to where we are today. And I have some volume weighted average price indicators at key levels that I'm plotting. And I'm also plotting various different highs and lows. So one of the things that we want to look at is in October, on October 1st of 2018, we hit a high in the S&P of 2935. That was a crucial high, and if you look at the volume-weighted average price since then, the trading activity in areas of interest, you see that it's come down. We've been trending down. We're below that level there of 2699 of the volume-weighted average price. Now, what does that mean for technical analysts? What that means is that we're in a downtrend on a shorter-term basis and intermediate-term basis as well. And that also means that we have a lot of what's called overhead supply. There's a lot of interest and buying interest that is at a higher level. So a lot of people are underwater from the fourth quarter. Very important to understand. So what that means is we need to look at key resistance levels, areas that were actually support beforehand that are now resistance. That's called role reversal resistance. And that's really what we're wanting to look at right now. So what we see is we had a couple of waves down. We had this big wave down into October 29th, and we hit a low of 2601. We popped back up, and we hit a high on 11.7 at 28.12. We've come back down, and we had almost like a little tight trading range, and then that failed. And that was a key action that we saw. When we saw that these two little support zones that we saw, the ones that were established October 29th and November 19th, when we saw those fail, that was a really key indication, and I'd been talking about it along the way, that we were probably going to have more of a panic sell, and which we did, and we had it right into the holiday. And I was having a conversation with a friend of mine, and both clients as well as other investment managers, and we were talking about, can you remember when the market has sold off like this during Christmas time? And I was like, no, I cannot remember that. And if you go back through time, really it's been many, many, many years since we've seen a big decline like this right into the holiday. In fact, if you look at the facts here, the S&P 500 came down and hit a low on December 21st. It hit a low of 2355. I mean, it came right down right through the holidays, which was not a lot of fun. Normally, it's quiet. You don't see that. Now, there's a lot of speculation about what was happening there. There's speculation that there was tax loss selling, that there was hedge funds that were paring back and liquidations and things like that. We did, in fact, see some fund flows pulling out in some mutual funds. But in general, we didn't see a mass exodus in the fund flows. We didn't see a mass exodus in the mutual funds or the ETFs. We saw somewhat of an outflow, but it wasn't massive. Okay, so it was an interesting thing to watch. Now, I had been sending out various tweets and various communications saying that it was time to sharpen your pencil, because there are stocks now that are coming into zones that make some sense. Because one of the things that we're looking at is not just the technicals. The technicals are very, very important, and they help us to time our entries, but also the longer term fundamentals of value. So we want to know, like, longer term at this multiple, what is a general sense of the rate of return I can earn if this company grows at a certain percent? You know, obviously, the more stable a company is in terms of its earnings and cash flows, the more we can actually estimate value. But we want to just have some sense about where the value is and what that means in the context. It helps us put the technicals into context. So really what's happened now, in my opinion, is that we've come down enough now where there's some reasonable value. It's not super undervalued. It's not killer value, but it's reasonable. So that's good for investors. So investors do have an opportunity now to put longer term money to work here. And it may not be the bottom yet, though, is my next point. So this is why I think you should take your time. You put your money in, you put them in treasuries or cash, and you scale your way into the market right now. That's the tactic that I'm taking right now for clients. Okay, so what I'm looking at right now is that since we've broken that key level of resistance that we had, or support, I should say, now that support is resistance, right? So that area at 2601, 2632, those are areas of resistance. Well, now we're right back up around close to those levels. So it's really, really important. Typically what you see in this environment is you see a pause, you see a period of uncertainty. So some traders will be selling into this right now. Some people will basically be looking at it as an opportunity to lighten up. Others will be, thinking, hey, I still think it's bullish, so let's just keep buying it. So what I'm expecting is to have a tug of war here, a tug of war. And if the economy does slow down, that tug of war will ultimately be won by the sellers and we'll have a decline. If we have some stabilization in the economy, what we'll probably see would be my guess based on, analysis of history, analysis of market behavior and psychology, we'll probably see some meandering for a while as we chew through that resistance level and we get rid of those weak sellers or, people that want to get out there that just think, hey, I'm back to even, let's get out. Okay, so that's what I'm expecting right now. What we saw, just to kind of highlight where we went here, we have a proprietary momentum indicator that I developed that basically looks at multiple time frames in the market, and it compares and it scores it from 1 to 5. So it will give us a 1 if it's really bad, or give us a 5 if it's really, really exceptionally strong. And we came all the way down to the lowest level, and we actually have bounced off that. We've ticked up off of that, okay? So that's good. We've had a little bit of a bounce off the low, so now we need to test that resistance level. And the other thing we look at is just, breadth. We want to look at how many of the stocks are moving in an uptrend versus a downtrend. We saw a very severe oversold condition. If you look at the percentage of stocks that are below the 63-day moving average, that came down to a very low level, very, very low, approaching zero, basically, in the S&P 500 stocks. And now we're at a quarter of the stocks, about 25% of the stocks are actually now above their 63-day moving average. So we're making that test. We're trying to see where we're going to go from here. So that's generally what I see happening in the stock market right now. We have fair valuation with some securities, good time to be putting money to work. Take your time and then understand this market is long in the tooth. We're due for some form of a slowdown at some point. We just don't know exactly when. But longer-term investors should, in my opinion, be looking at putting money to work as we see chop here. This is Louis Llanes with WealthNet Investments for the Market Call of the Week, signing off for now. Happy investing and trading. Hope you guys have a great 2019.
If you like this information, be sure to subscribe and follow us on Twitter and Facebook. The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals.